Happy Friday. We're keeping this day rolling. Another video, another question kind of came in, and it's a complicated question, but it ultimately surrounds how we calculate tax deductions. And really, this one is all about cash versus accrual. And it's a method of accounting, right? If you're not an accounting student and you might have never heard these words, but the gist is for most of us in this world, we work under cash. Meaning when we spend money, well, money goes away. When money comes in, we receive money. So from a business standpoint, think of it this way. Cash is easy. Money gets deposited into your company checkbook for revenues. You recognize the revenues. That is a taxable event. When you spend money on expenses, that is a taxable event. You have spent the money on taxes. It's not like you ordered something and you didn't pay for it. It's not like you billed a client for something and they haven't paid you yet. This is cash. Money in, revenue. Money out, expenses. Now, accrual is exactly the opposite. Accrual is whereby if we do the work for a client and we bill that client, that is the revenue recognition. We don't care when they pay us. We recognize revenues when the work is completed. Now, cash is easier for people to understand than accrual. However, accrual is actually a more proper way to diagnose the health of a business because cash is all timing, right? But accrual is going to be more like you could compare what did we do this week to the previous week. Well, you might not be able to compare that when a client pays you net 30, net 60, but if you do the work, if you deliver the product, you can compare that pretty easily. So most of Wall Street, in fact, Wall Street is, right? GAAP accounting is going to be accrual based, and they're going to use that when you're looking at financials on big companies, things like that. They're always going to be accrual. But smaller business, they have the right to choose cash. There are rules on when you can be cash and accrual. They've changed over the last 20 years, but for the most part, most small businesses can be cash if they want to. But it's important to understand the differences. When we do say when you are accrual, you are going to pay taxes on receivables, right? But you will also get a write-off for your payables. That is a big deal when it comes to accrual-based accounting where you don't have that under the cash basis. So that's your cash versus accrual, just kind of understanding a little bit of that selection. The only thing that I'm going to add is people feel one might be more manipulatable than the other when it comes to tax time, right? At the end of the year, if I'm cash basis, I'm gonna pay a bunch of bills. Now you can pay some prepaid expenses and write them off. They've gotta be used up in 12 months, right? You can't be like, let's prepay my rent for 7 years. No, it doesn't work that way. Even though you're like, I gave up the cash, there are protections in the tax code that doesn't allow you to do that kind of stuff. But people think, I can manipulate by doing some of this stuff. Sure, but if you understand the concept, you're only gonna get it for 1 year. Because what's going to happen the next year? You don't have any expenses because you prepaid them in the previous year. So what are you going to do in December? You're going to do it again. Did I actually gain anything? No, because I only gained it the very first year. So if you understand that concept, you're going to be constantly doing the same strategy year after year so you don't feel like you're taking a beating on your taxes in that period. It's the same thing on accrual. What do you think the accrual people do? Well, they're going to kind of go, well, let's just not bill until January 1st, right? Again, it doesn't matter on collections. Well, if they don't bill until the following year, they don't recognize the revenue until the following year. But then what did they just do? Well, the next year they're inflating their revenues in essence, and they're going to have to repeat it. Let's not bill until the next January and the next January. And so again, it's a 1 year thing. It's not that big of a deal. When you're picking cash versus accrual, you want to pick it that's going to be based on what's best for you in your business, not necessarily, oh, it's tax. Cash is easier. I'm going to tell you that. Cash is easier. It's going to be less expensive for your accounting. All of that stuff from a cash perspective is easier from that standpoint. I love cash. Don't mind accrual. Either way is totally fine for most tax accountants or accountants in general. So there you go. Have a good one.